Okay, we're live. Hey, Renee, how's it going?
Hey, Amy, it is going good. Hope all is well with you in this 2023, this new crazy year we've already had.
Yes, we're hitting the ground running, and that's why I'm so excited about what we're talking about today because we're getting into tax season and we're going to be talking about self employed people being able to buy a home. That's whether you're an entrepreneur, you're a business owner or small business owner, if you're an independent contractor. So basically, if you get like a 1099 or you file a Schedule C, file a Schedule K1, Form 1065, something like that, and you want to be able to buy a home, well, it's a little bit different than if you're a W-2 employee. Isn't that right?
Oh, yes, ma'am. It is definitely very different. It's totally different in that typically, when you're self-employed and you're a 1099 employee, you have the ability based on the tax laws to use your expenses that you've incurred during the year, whether it be for, equipment, anything. There's so many things it could be, but based on the tax laws, you are definitely allowed to use those expenses to basically write down your income and not have to owe the IRS as much money, which is awesome until
Right.
you're
Just
ready
like
to buy a house.
just like us realtors, we're considered to be independent contractors. So yeah, when I file my taxes, I want to write off as much as I can legally write off to reduce my tax liability. But if I was going to turn around and buy a house or plan to buy a house this year, that might not be the best strategy, at least for, this year. So that's why I really wanted to talk right now while we're in January when people are getting ready to go to their CPAs, to go to their accountants, and to file their taxes, to make sure that they've got some guidance, to make sure that they don't inadvertently make it where they're not able to qualify if that's the only income that they have is being a business owner, being an independent contractor. So
Right.
that's going to be, like your truck drivers, hairstylists, small business
Like
owners.
nail techs. I'm working with someone now who does nails, so
Okay.
just
Yes.
anybody, like you said, that is self-employed and does not receive a W-2, they receive 1099. So, or waitresses that get a lot of, tips. Waitresses, casino workers that receive a lot of tips, they make a lot of money,
Hmm.
but they don't realize that if it's not on that tax return and it's not reflected in line 31 on their Schedule C, that doesn't really matter how much you make because lenders are not allowed to use that as income.
Hmm.
If you basically, the IRS is saying that if you don't pay taxes on it, you cannot use it to buy a home.
So
That's the bottom
basically, when we receive a W-2, because like I do bookkeeping, so I do get a W-2. And it go like when we refinance our house and we used our W-2 income, that's using the gross.
line.
That when you are a business owner or you get a 1099 or you're doing a Schedule C, it's not the gross. It's not the $100,000 you may have made. It's going to be what you actually netted, right?
Correct. That's exactly right. If someone does a Schedule C, if they will look at it, they will see that very first top line is their gross,
Hmm.
and then listed below that is everything that them or their accountant has the ability to use for expenses and things they've incurred during the year to lower their taxable income. So if again, that's where those things you're not paying taxes on that. So when
Hmm.
you look at line 31 on that Schedule C, that's the
Hmm.
bottom line. That's the net after all that has been subtracted out. And that's what lenders look at. Now there are a few things here and there that we might be able to add back for depreciation, a certain percentage, that kind of thing, but that's not in every situation either. Every situation is different, which again is why it's so important that if you are self-employed and you're not sure, get your tax returns together, go to a lender and let them look at everything and give you all the different examples or scenarios or things that could affect you when it comes time for you to get pre-qualified and buy a home.
Yeah, if you're going to be doing that anytime this year, even if you're not even thinking about doing it until summertime or fall, you need to have the conversation with your CPA and go ahead and talk to a loan officer like Renee with Guild Mortgage and work together to figure out what is the best thing to do, because there's definitely not going to be a one size fits all on how to file the taxes, what to deduct. Because like I said, we want to owe the least amount of taxes possible, but that hurts when you're going to trying to get a loan.
That's exactly right. It's you definitely can shoot yourself in the foot if you're not careful. And as lenders, we need the 2 most recent years filed tax returns. And basically, we're going to gather the numbers. For example, as I mentioned on the Schedule C, line 31, we're going to take those 2 years and divide that by 24 months. And if that equals $2,000 a month, and you might have made $100,000 a year, it doesn't matter. It's all what you show the IRS on line 31 that you make, plus sometimes, again, some things we might can add back for, but that's lender's responsibility to know those guidelines and how that part works. But I'm just trying to give you a general idea so that people will understand what mortgage lenders look at.
And so it needs to be you need to be self-employed for 2 years. So let's say someone started a business in early last year. They started a business in 2022, and this is going to be the only one that the only tax return that they file for that. What about if they were previously a W-2 employee somewhere?
Okay, very good question. We do have to, we have to have 2 consecutive years filed tax returns. So that means they're going to need to wait until they can file 2023 tax returns. But again, it's still important to talk to your mortgage lender up front, even if you do have to wait another year, because depending on the amount that you're looking to purchase when that time comes and the amount that you showed that you netted in 2022, those two may not add up, so that person may need some guidance to say, this is how much you need to make in 2023 in order to average the two and qualify for what you are looking at. So at least it gives them some guidance. Look, I've got to get busy. I've got to make this much money to buy the house I want. And not only do I have to make that much money, I have to actually show that money on line 31 of my Schedule C, so that those 2 years can be averaged and I would qualify for the amount of home I was trying to purchase. So it's really good to get that guidance way in advance, most definitely.
So let's jump forward in time, and it's summertime. It's June 2022, and someone decides they want to go ahead and see about purchasing a home, and they've actually have been in business more than 2 years. Do you need a profit and loss statement, an estimated profit and loss statement for the current year?
Yes, 9 times out of 10, underwriting is going to want an unaudited profit and loss, just to be sure there's not a decline in the income up to that time. So, and there are cases where, an audited profit and loss may come into play, but, it's just every situation is different. But most of the time, yes, we will request an unaudited profit and loss statement for that 6 months of 2022. And that, again, is not to help us get more income for you or lose income for you, but we just have to make sure that your income is not declining. Because of course, underwriting would have a big issue with that, so that's what that's for.
So what type of loan can self-employed entrepreneurs, independent contractors get? Are we restricted to conventional, or can we get VA, FHA, USDA?
Good question. Again, any kind of loan, as long as you've got those 2 years tax returns and we're able to show enough income to qualify you, it's basically the same as any other type of borrower, W-2, whatever the case may be.
So the other criteria, like the credit scores and like
correct, as long as they
the
qualify in every
eligibility.
aspect. That's
Okay.
exactly right. That's exactly right.
Yeah. So we're still talking about just regular traditional mortgages, but for those that are self-employed. And so it's still the same application. It's just some of the different types of um, documentation that has to be provided. Now, this is not talking about like we were discussing off camera, bank statement type loans, or this is still just regular mortgage application. It's not
Correct.
alternatives. Get some water here.
Correct. Correct. And, we do have brokers that offer the bank statement loans for people who are self-employed, and maybe they've only been self-employed a year, but they want to buy a house now, and the restrictions, yes, are tougher. Credit score requirements are tougher. Those are conventional loans. And you just have to look at it this way. It is a much higher risk. When somebody's only been self-employed a year, they may have great income, but there's no way to foresee that will continue, which means that is such a higher risk for an investor. So, of course, it's going to have a higher credit score requirement. It's going to have a higher down payment requirement. It's going to have a higher interest rate because of the risk factor. But at the same time, if you want to buy a house now, that's something that, that at least it is an option. And they're basically going to get, tax returns, but most importantly, 12 months bank statements to show the constant cash flow. That's what they're looking for, to show consistency in that cash flow, because all they have is 1 year to base that on if you've only been in self-employed for a year. So, that's those are tougher.
Right.
We don't actually do the loan right here in our Guild Mortgage office. We are involved, but it's a different process when you're brokering out a loan to investors that do those types of specialty loans.
Mm-hmm. So really the bottom line is definitely to plan ahead, think ahead, to make sure that everything is in line. And I think that people may be concerned or feel like that they're jumping the gun if they go ahead and talk to a loan officer now, even if they're not ready. They know that there is a year off. But whether you're self-employed or not, I tell practically everybody I talk to, go ahead and talk to somebody, even if you're not even if you're, like let's say somebody's renting and their lease is 6 months off. Well, they should go ahead and talk to someone right now to make a plan. Even if everything's fine, it'd be great to know everything's fine and this is what you should do and not do.
Yes, I agree 100%. 100%. And that if it's 6 months down the road and you have some things on your credit or debt to income issues or whatever the case may be, you've got time to prepare for it. Instead of coming to me in 6 months saying, okay, I'm ready to buy a house now. I'm ready to go right now. Well, then we start digging into the application and pulling credit, and there might be some challenges we have to overcome, and that's going to cause delays. So the sooner you know about those challenges, you've got that time to prepare to get those things fixed or removed or whatever the case may be. So
and it could even just be minor things that might just help improve their score to get a better program or get a better interest rate.
Exactly. That's exactly right. Because when you come to us, we want to be able to tell you every product that you're eligible for, why each one is different than the other, and, fit it to what your needs are. So, but if you have the ability to get your scores up in that 6 months, you may be able to do a conventional loan, which has its benefits as well. You could do a 3% down conventional. PMI on a conventional loan, drops off after a certain amount of time and based on your value. Each loan has different things that make them better for some people versus others. But when the time comes, that customer, we want to get them the very best deal they can get. And if they've started 6 months in advance, I would have then at that point emailed them their credit report along with an exact plan of action to get where they need to be, an estimate on roughly how much money they would need to have saved based on the scenarios that we've discussed. I tell them the do's and don'ts, don't open any new credit, which is a big one, which for a couple of reasons, because it affects what you qualify for. It can affect your credit score. There's just several things that you don't want to do while you're in the process of getting prepared to buy that home if you can help it. So my plan of action is very detailed, very thorough, and tells them the do's, the don'ts, how much money to get saved up. I mean, it's very detailed so that they can always go back to my email and say, okay, check this off. I've done this, and just be prepared. It's just not a process that you really want to jump into right when you're ready to do it. If you think for a minute there's any challenges, and not only that, guidelines have changed for lenders on how income is calculated. And that's a big factor. That has been a challenge because people don't realize that, for example, let's say somebody started their job 6 months ago. Okay. Maybe they were on salary before, but now for whatever reason, they're on hourly or whatever the change may be. Anyway, so what we have to do as lenders, we have to look at what they make an hour, how many hours they make a week. Then we have to make sure their year-to-date supports what they should have made if they were working 40 hours per week. Well, for example, we've had people that might have been out for 2 weeks with COVID, unpaid, which means what? They didn't get paid for it. So their year-to-date is not going to support them making $20 an hour for 40 hours a week. And that becomes an issue that we have to work through. And I'm not going to go into all the details because it's very confusing, but things like that we can tell people up front, make sure if you're out of work, it's paid, and explain that your year-to-date income has to support your hourly pay at 40 hours a week if that's what you're counting on using to qualify that buyer. So these things help us to tell people up front so that they won't have any issues when the time comes, because they knew they had a plan in advance. They stuck to that. And when that 6 months is up, or actually I would probably say maybe 45 days from that 6 months, come back to me and let's go ahead, get a pre-approval done, get you a pre-approval letter so you can start looking for that home and close to match those dates of whenever it is you have to be out of your apartment or your lease or wherever you are at that time.
And especially during the buying and selling frenzy of 2021 and 2022, we did not want to take unqualified buyers out looking at homes, because by the time they got everything together to get pre-approved, that house was going to be gone.
Oh, for sure.
And also, I've actually seen this 2 or 3 times. People go and see a house, like an open house, or they may call the listing agent directly. They fall in love with the house, but they can't buy it then. Yeah. They need a year to get something fixed with their credit. I saw that recently with the listing that I have with the open house. Someone who they really wanted it, but unfortunately just wasn't at a point to be able to buy it. And I really hated that for them.
I do too. I've seen it way too many times, and it's heartbreaking for them, and it just gets them down and out, and they're like, well, never mind. I'm just not gonna purchase. Well, because they just get down and out about it, because I know exactly who you're talking about, and they wanted that house so bad. It fit their situation, their family size, everything so perfectly. And it broke my heart to have to tell them that, we got to wait a little while, but your house will come along when the time comes, and just try to get them back hyped up about getting prepared to buy in a year, and so you're exactly right. So again, just being prepared is the key, and not being afraid or ashamed or embarrassed or, or about your lack of knowledge or challenges that you may have or have had. Again, it's life. We've all been there. It happens. You can get past it. But if you don't have any guidance and you're afraid to take that step to get guidance and get a plan of action, you're never going to move forward with that dream of buying a house.
You don't know what you don't know. And I tell, like most everybody I talk to, if you when we're talking on the phone, or even just you and I talking right now, as soon as we get done, I'm gonna think of something else I wish I would have brought up then. So I'll tell them, call or text me, if you got a question, and don't worry about it sounding silly, or that you think that it's something you ought to know but you don't know. I'll answer it, or I will find out the answer, or tell you where to go get the answer. If it's a long question, I'll tell them to call you. If it's something about a home inspection, I'll answer that. So, if we're all a first time home buyer or getting a loan the very first time. First time we drove a car, we didn't know, but you learn. And we have a team of people here. So we have like me and you and the other people at Guild Mortgage. I got my broker. Then we've got, you've got underwriters, people I don't even know at Guild Mortgage. Then we've got the title company. We've got, the closing attorney and the paralegals, the legal secretaries that work there. So it's a whole bunch of people. And we can find out the answer to just about anything.
That's right. Exactly. It takes a village sometimes, and that's okay too.
Well, buying a home is a lot of money. It's a huge purchase. So it definitely takes a team. And we bring it together and make it happen. But I did have I was looking at some notes and circling back to talking about buying if you're self-employed. So, of course, you got to have your tax returns. And that's going to be, you would need to get the official IRS transcripts, right?
Well, just a copy of the tax returns that you actually filed.
Okay.
And sign. You have to sign them. Right. Everybody sends them, and of course they're unsigned because you don't have to sign your own copy. But anyway, right. But we just get the full tax returns that you filed, and we use those.
And probably a profit and loss statement for the current year. Now, I was reading something here. This was some notes I had. And what about if somebody is going to use funds for a down payment that might be in their business checking account?
Okay. It's that's a good question. Of course, we have to get your personal accounts, your business accounts. It's kind of difficult to explain, but that is fine. We just have to document, and basically, just like if it's your regular bank account and there's funds in there, if you have large deposits, it has to make sense. It has to be consistent for your business. There's just several things that lenders look at. People do it all the time, so it's not a problem. It's just a little more involved. But yes, I mean that's certainly something most of the time we can do.
Okay. There again, no one size fits all. So you just have to ask. Say, hey, I've got X amount of money, in my business checking account, and I want to use it for down payment, closing costs, or whatever, and then find out exactly what they need to do.
Right.
And also not going and doing things on your own. Don't go rogue.
Right.
Don't go rogue and open a credit card and get that cash advance and think you're going to be able to use it for a down payment or closing costs because.
Correct. Yes, that does not work.
That's an example of what people may not know. The very first house I ever sold, let's say if I keep that short, online lender told the guy he could buy USDA in Montgomery.
Oh, no. Gosh.
No. But he also didn't know that so we ended up getting with a 100% financing program because he had money for closing costs, but not for down payment and closing costs together. And that was one thing he had thought about doing was getting a cash advance off his credit card for his down payment. So no, you can't do that.
Exactly. But like you said, people don't know. People think that, if they can come up with the money, that's all that should matter.
Mm-hmm.
Unfortunately, I wish it worked that way, but it doesn't, and it has to be from documentable sources, and that is documentable, but you can't borrow money to borrow more money. I mean, they want you to have, or your funds are required to come from the sources that are required by, FHA, conventional,
Mm-hmm.
or Fannie Mae, Freddie Mac. They dictate what sources your funds can come from, and we as lenders have to prove without a shadow of a doubt that that's where it came from.
Right. And I think sometimes people, they feel daunted, they feel scared because this is a lot more complicated than going and buying a car, than going down to the bank and getting a personal loan, or doing a 5-minute application for a credit card. But there again, that's where I talk about, we've got the team. You've got the team with the real estate company, your real estate agent, you got the team with the loan officer, the team with the title company, your home inspector, appraiser, everybody is working together, because we all want to get to the closing table. Even the seller, even if there's sometimes there's, we may not agree on the repairs, or may not agree on different little things like that, but ultimately you want to buy a house and they want to sell the house, so we're all
That's
trying to work together to get to the same end goal.
That's exactly right. That's exactly right.
Well, do you think of anything else we may not have touched on with self-employed?
There is, there's so much, which again is why you and I both, preach to people: be prepared, start early, ask those questions.
Mm-hmm.
Let us look at the big picture for you now, whether you're buying in 6 months or a year or now, whatever the case may be. Let us help you get prepared.
Mm-hmm. So basically, if you're self-employed and you want to buy a home, you're going to fill out the same mortgage application as anybody else. It's just going to be some different documents,
Mm-hmm.
and a few different hoops that you may have to jump through. But that doesn't mean that it's impossible, or that it's an unattainable goal. Not at all.
Well, that's exactly right. If it's attainable, we will get you there.
Right, right. Okay, so I guess we'll wrap this up. So if you're watching this, you've got my contact information and Renee's scrolling across the screen. So I'm Amy Brown. I'm associate broker at Next Generation Real Estate Group, and Renee is a loan officer with Yield Mortgage. And call, text, email, message, basically anything. I talk to a lot of people on Facebook Messenger, even more than text messages.
Me too. There's many, many ways to communicate. So
yes,
that is not an issue.
Exactly. So anyway, thank y'all for watching, and Renee, so happy to have you on here again.
Well, thank you for having me, and I hope the information's been helpful for all of our self-employed people. And if not, and they need more info, they know the two people to reach out to.
Yeah. Or you can also comment below this, and we'll come back and reach out to you personally and respond to you.
Yeah, that's right.
Okay, Renee.
Thank you. I appreciate it, Amy.
All right.
Bye-bye.
Bye.